What's going on, everybody? Michael Silva here. We're going to be doing some technical analysis on the SP 500. We're going to look at a couple time frames. We're going to look at the daily and the 30-minute time frame to get a good idea as to where the price might be heading. We had some very interesting price action happen today, and I want to go over what that candlestick pattern means, the psychology behind it. Let's go ahead and get into it. All right, welcome back. If it is your first time watching me or first time visiting this channel, I do these videos 5 days a week, the updates on the S&P 500. And then every Saturday I post my weekly scan, which is my weekly watch list. And I kind of go over how I would make certain trades. And then every once in a while I sprinkle in quick tip videos as well. So if you haven't done so already, make sure to subscribe, smash that like button. It is greatly appreciated. I'm trying to grow this channel, and I want to thank all the recent subscribers that have been kind of flooding in. I just reached the 10,000 mark, so thank you so much. All right, let's go ahead and hop into today's analysis. Now, I kind of want to break this down a few ways. So we've been kind of looking over at supports and resistances, which I want to draw out here on the daily, but then I just want to kind of like go pick out ideals in each favor, because I know that there's some bullish ideals going in the bulls direction, and there's also some bearish things happening on the chart. So we got to kind of weigh the two to see really what's the best option, how to trade the current price action going on, you know, within this week and maybe potentially weeks to come. Now, overall, when you look at the chart, you can obviously see it's moving up, right? It's pretty simple that the chart has been moving up. However, there's been some pretty decent price declines up this way. So it's been really choppy weather. You know, up, down, up, down, up, down, up, down, up, down, up, and then it's kind of going sideways right now. So as from what I see, this is currently one for the bulls. And the reason why is because if you were to buy the dips in this kind of moment to the upside, you'd be pretty successful as far as trading goes. The next thing I want to look over is what the price action has been doing these last few days. And if you look, it created this kind of pull up and then it's been going sideways. We kind of discussed this on previous videos, that we thought that after this candle formed right there, we thought that we could maybe see it go sideways and either break up or break to the downside. And I'll be honest with you, at this particular time, I'm still a little uncertain as to where the price action is going to break. So we're going to look at support and resistances here, as well as a 30-minute time frame to get us maybe a better idea. Now, also, I have not decided to trade through this choppy weather right here. It's just too up and down while it's consolidating. So I'm waiting for specific areas for the price to break out to or to break down to in order to place any specific trade for myself, in particular on the S&P 500 or the SPY. Now, when I look at resistance and supports, the main one that I really see is right down here. I mean, it could go a little bit higher. I'm going to say 3,000 because that is, you know, a key level, and it has been throughout this entire analysis going up to this point. Now, it obviously can come down just a little bit more to this level right there. So it's more of a zone, right? It's, let's say, a zone between these two areas. It's a bull's camp. And if it breaks down the price, so right here is going to offer up a lot of support. But if it closes below that green line and comes into this range down here, there's going to be a lot of volatility, a lot of chop, a lot of moving back and forth, because as you can see, it happened right here in the previous history of the chart. So I am particularly not waiting to see a breakdown per se. If it does, I'll probably just wait it out even longer. But if we get a close below this 2,800 level, then I can see the price dropping further down to the downside. However, now since we know where the main key support area is, the 3,000 to about 2,950, let's call it, the resistance that I'm looking at is going to be right up in this range. And it's going to be a zone, right? We call it the bear's camp, but I just want to keep little lines on there right now before we start talking about the intraday price action. So the reason why I'm going to have it up here is simply because 3180, 3190, call it 3200 if you'd like, that is going to close the gap that's kind of sitting up here in the sky. That gap is known as an island reversal pattern. Basically what took place is it gapped up, moved sideways, and then gapped way down, leaving this empty space right throughout here. And it still has not filled that gap. It's likely that it would potentially fill it. We've been talking about that. It came really close, as you can see, just at the upper part of this kind of candle right here, which we'll zoom into here in a second. But it didn't quite close the gap fully. So let's go ahead and zoom in closer because I want a good picture of this. All right, so now we have a clear view, clear picture of this current price action that's going on. As you can see, we hit a low today, pretty much at the gap fill of, well, let's call it 30.80 where it happened to be. We're gonna make that green because it did act as support. As you can see, it came down, touched that area, and then moved itself back up. It acted as support here, it acted as resistance here, and then resistance back here. So this is offering up a big level for the S&P 500. And as far as the top range goes, we're looking up right about here at 31.55. I wouldn't be surprised if it was just a little bit higher, but you know, we'll call it what it is on the chart. 31. You can call it 31.50 if you like. It's just easier rounding purposes. So let's call it 31.50 for the resistance right up in there. And as you can see, the price has been kind of just interacting within this. So we're really just coiling up to potentially see a move to either direction. And you can see in the previous pass of this little candle formation, when it does get into this area, it looks like it either just kind of gaps out of it or kind of gaps below. As you can see, there was a gap that went from this candle up to here, and then it gapped out of the channel. And right now, as we're seeing it, it's kind of just sitting right in the middle of that channel. Now, this is what I want to really kind of point out to you. This is a good lesson as far as the price action's been going. We've been calling, for example, these two right here was a bearish engulfing. We had another bearish engulfing kind of take place here. Those are both pretty bearish as far as price action goes. But these 2 days, however, these 2 days right here, including today's price action, this right here is kind of interesting to me. This makes me think that, hey, potentially that could be a sign of a reversal, more of a bullish direction to go back up to test this level. And let me explain why. Now, we have to take both these 2 days into consideration as to why. The technical term of what this is called, it's called a piercing pattern. And a piercing pattern is basically having a big red day, such as this day right here, take place where it opened up, came down, and it was just one big bearish candle. And then a piercing pattern shows bearish momentum the next day. However, the bulls start to take charge and move forward. So what you can see here is we opened down here today, and then it pushed lower. Okay, so we gapped down, which is bearish, but then the price action moved all the way back up throughout the day, piercing through half of the previous day's body. Now, overall, the trend was somewhat down, I would say, because you had some previous price action moving down. That could be kind of argued that it was actually more going sideways, but there's a lot of different ways that this can be adapted, and this I think would be more acceptable to call it a piercing pattern. Another thing that makes me think it's a piercing pattern is because it happened to do so at a very interesting level of support, that 30.80 that we're kind of talking about. Let's make that green. So a price gapped down, came down, touched the support, and then worked itself pretty much throughout the rest of the day up to this level. Typically what that means is there's a reversal in market sentiment. Now, keep in mind too, typically what you'd see on these type of patterns is you'd see it on average to above average volume. Now, I will say that is the one thing that doesn't stick out to me is when you look at the SPY, the volume is actually significantly lower than the previous day's price action. So the volume was lower than today's. So the volume on today's candle was lower than yesterday's candle and the previous couple of days. So this could just be a kind of a fake out right here. It could be potentially saying that, hey, I want to bounce up just a little bit higher and retest to try to close this window. But as if I see it, I mean, it's going to take some more time in order to get a good idea as to where the price action wants to go. Now, this is all very important because when you're dealing with chop in the markets kind of like this, and when you're looking at the S&P 500 or the SPY, you got to understand that a lot of different charts that you trade, they interact very similarly to the SPY. And the SPY, or the S&P 500 index, right, you can use it as a leading indicator. So that's why I've been actually kind of stepping away from my live day trading. I posted one today, quick short and bullish context. It was pretty cool. I'll link it right up here. But if you don't have a clear direction, you'll probably notice on other charts too that you're having trouble seeing a clear direction as to where the price goes. So you got to really just be patient to see where the price goes. And as I see it right now, there is really no clear direction within this channel. So we have the bottom part of this channel, which is 30.80, and the higher end of this channel, which is 31.54. Okay, and I've been talking about this in some videos, so we're going to go ahead and then show with the blue lines, as to where the price can go if it's broken out. So that'd be the next couple of areas that we'd be looking at. So I would say, if the price breaks out in either direction of the support down here of 30.80, if we can close below it, right, it has to close below it in order to be confirmed, not just a move up and then back higher. But if it closes below it, I think that we can easily test back this 3,000 level. And I've been saying that. I still think that the price wants to kind of head in there to that range. But like I said, it's this kind of pattern psychology right here is saying, nope, I think I still want to go higher. So we have to wait till tomorrow and maybe a couple of days. It could be a couple of weeks within this channel. It's hard to say. But if it breaks below that 30.80, I do really believe that we're going down to 3,000 to test it. I mean, it could be a little bit lower than 3,000 too. Like we can go to 29.60. That's more where the, I think it was the 50% or 68% retracement level is on the Fibonacci. So we got to keep that in play. And then if it breaks above the resistance, which is at 31.50, let's call it, the next level of resistance is really that 31.80 to 3,200. So 31.80 to 3,200 is kind of a zone. And the reason why that's an area of resistance is because it would be filling that window. And when you fill a window, the upper part of that window or the lower part of the window, if it was a gap up or gap down or whatever you want to say, it's going to act as a support and or resistance. And in this case, it would be resistance. So I'm going to keep those up. Let's go head over to the 30-minute time frame to get a good idea as to what this price action looked intraday. All right, so I'm going to go ahead and put this blue line here. This is just to show you where the day starts. So it started right here at this blue line and then moved itself forward. Let me go ahead and remove that now that you see that. And then I want to talk about the price action kind of taking place. So this big hammer candle right here, we had the gap down today at opening, not by much, but it was a gap down. Let's call it what it is. And the price moved itself all the way down, as you can see that wick, to here, 29.80, let's call it, where the level of support was that we were just talking about on the daily time frame. And then it worked itself all the way back up to close above where it opened up. That right there is an extremely just blatant reversal candle. So if you would have caught that within the first 30 minutes, you would be like, yeah, that's actually a good opportunity to potentially get in and move to the higher direction. So we saw that happen right out of the gate, which really kind of shows us, so we had the downwards movement and we had this big hammer candle, which is known as reversal candle, at least in this context. We saw up some sort of a bounce. And as you can see, it had some pretty big price swings throughout the day, but overall it did move up. Now it moved up right out of the gates and then kind of got blocked up right here at this 3,100 level, let's call it. And then the price action got dropped lower. See, notice it just kind of went sideways right here. It was very difficult price action to kind of decide as to where the market wanted to go. And then once again, over here, when it did break out, you saw it as a nice big pull structure and then moved sideways again until the next breakout. So another bull pull, bull flag, sideways consolidation and movement. And then it just crashed down. And then at the last 30 minutes, it got bidded up again. So very interesting price action throughout the day. This is what I mean by like, it's very choppy. So this was like some bull patterns right here and it made quick moves. And you're like, okay, that's pretty nice. But then it was followed by this just shot to the downside or this move up and then shot to the downside. So really it was kind of, risky waters today. I found just a few things that I was trading, like I talked about on my trading, my live trading video. I saw it was bullish momentum, and the only reason why I shorted into it is because it got a little overextended. And this right here, I mean, it's just very unclear as to where the price action wants to go. So really, the things that we're looking at on this on this chart right now, still to this to this day is going to be this 3150 level. I'm just going to move it down just a little bit just to make it a little easier to see. And then we have 3080 down here as the support. So those are going to be the two things that I'm looking at. Now, on a shorter time frame, if I were to look at the history of the chart, there's clearly going to be some resistance right here at this level. Now the price action seemed like it tried to touch it, and it's going to be right here at this blue level, so 3120, let's call it. And the reason why is if you just look here, it had resistance, resistance, support, resistance, support. So it just kind of, that looks like a big area that it has to kind of get around. And as you can see, that's in the middle of that channel. So it's just, you know, it's some interesting days. It's too hard to predict price movement as at this moment because there's really no direction as to where the price wants to go. So we just need to be patient. If you don't have a clear picture and you can't make a good risk versus reward trade, I would just kind of suggest staying on the sidelines until you see some clarity. And if you see clarity in this, by all means, that's awesome, then trade it. That's the 30-minute time frame, and that's all I have for you for today. I will see you on the next episode tomorrow of the S&P 500 Technical Analysis Update. See you later.